Good morning, everybody. Today is Thursday, July 16th, and this is your QOL trading pre-market analysis. What you see on your screen right now is our website at QOLtrading.com. First thing you'll see here is to add your name and your email address so you can get on the list for our weekly newsletter that we put out on Sundays. And in the newsletter, we go over all the week in review. We go over levels. We go over geopolitical news, everything that's forecasted to happen in the week to come, economic data. I go over price levels, supply and demand, my opinion on the markets, and then I give levels on your Mag 7 stocks. I started doing crypto and SpaceX. So put your name and your email address in here and you'll be on our weekly subscription, and it is free. So we've put out 17 editions so far. Then also down below here, if you want to learn more about our what we have to offer as far as mentorship, you can click down here and you get a free 15-30 minute consultation with me. Then up at the top here, if you want to join our Discord community, you can hit the live trading desk or this Discord symbol. It'll bring you to this page right here. This is our Discord channel. In the Discord channel, there's free stuff here. The pre-market links here that I post every day. That's where you are right now. Then we have a levels channel. This is all for free. You want me to cover any levels for you, just drop me a note. I'll be glad to cover the levels. I do not cover any penny stocks though, however. And then this gives you another link here, Get Trade Access. It gives you another directions as far as how to get trade access to our trading. So our live trading is 9:30 a.m. to 11 a.m. Eastern time, and that'll bring you to the that'll give you access to our trading room, right? So if you click on this link or the live trading desk or the Discord, it'll bring you to our web page right here, and you can click down here, sign up for free. And then if you want to access our trading room, you get a free day trial here. You click there. If you want our scalping, our QOL ORB scalping tool that we've just put on the market, you could click down here. And then if you want a bundled package here, you can click on the next link here and you get a bundle package for $99, which will give you both access to the trade room 5 days a week, as well as the scalper. And the scalper has been working fantastic. What you see up here right now is TSLA, and this is the actual tool on TradingView. I made it for both TradingView and Thinkorswim, but Thinkorswim I'm having problems as far as them supporting the marketability of it. So TradingView is the best. Actually, it looks pretty clean on TradingView. So what you're looking at here, left-hand corner here is a 1 minute chart. To the right of that is a 2 minute chart, and down below, the big one is the 5 minute chart, right? And everything that you see on the screen here is all populated as the market opens and moves. I don't write any of this stuff. These are none of the text or the charting here is my doing. It's all generated as the market moves. It gives you the table on the right-hand side, so it spells out what's happening on the on your charts as the market's moving here. So you can see we had a 1 minute range. So what it plots is your 1 minute opening range there on the 1 minute here. If I'm on a 2 minute, it's plotting the 2 minute range. And if I'm on the 5 minute, it's plotting the 5 minute range. So however you base your strategy, if you're basing your strategy on a 1 minute break of the opening range, 2 minute break, or the 5 minute break, it gives you all the data that you need here, right? So here on the 1 minute, it's telling you the high of the range. This is all yesterday's data. The only thing that's current right now is the trade bias, and that's measuring where the market is right now. You can see it's flipping a little bit right now. So this is yesterday. The opening range is 402.52 to 399.39. It gives you your mid-range of that opening range, and then it gives you the total dollars of that opening range, and it gives you the quality of that range as well. Then it also rates the grade, whether you want to be, if it's a B or C, D or D grade, whether it's long or short, right? So you can see right here, the long, and it's all current right now. So it's measuring what's happening in the market here. And it measures your long bias, right? So on the 1 minute, it's showing a long bias. On the 2 minutes, showing a short bias right now. On the 5 minutes, showing a short bias. So, you can do this on a 15-minute chart if you'd like. So the 15-minute also, I mean, if I go over here, I'll change this to 15-minute. and show you on the 15-minute. This is the 15-minute chart yesterday. So you're going to have less noise on a 15-minute, right? Because there's less signals. However, look at the signals right here. Now, what it does is it gives you your range. It gives you a first price target. It gives you a second price target on the downside, as well as giving you a first price target and a second price target on the upside. You could see yesterday with Tesla, it bounced up. It hit your first price target on the open. Then it told you to exit, that you should be exiting. And then it gave you your short right here. Now, what it means is it's telling you, it's trying to take away the, all of the discretionary decisions you have to make as a trader. And so it's not saying take the trade. You still have to do your homework. However, it's taking out about 90 to 95% of your discretionary decisions. The rest of the stuff is for you to understand how price action moves. And, that comes with computer time and years of watching the same stock or same handful of stocks. I used to have like 20 different stocks up here, and then I learned that, your brain can only handle so much. So focus on one stock, has a lot of liquidity, a lot of volatility to give you your price action. Let's get over to the economic data for today. We did have some news that just came out right now. You had core retail sales down 0.2%. I think that's actually going to be a negative impact on the market here. Philly manufacturing index at 41.4%. And then you have retail sales at even month over month. Unemployment claims, 208,000. If it's down, I think that's going to impact the market negatively more than anything else right now. So we are looking at, at first, the beginning of the year, we're going to have a couple rate hikes. Then it went up to 2 rate increases. And now I think it's down to 1 rate increase. So a lot of uncertainty with the marketplace right now. And I think that's why it's been a bit choppy and not one directional. As far as Friday, what we have left in the week, I see housing starts at 7:30 and building permits before the market opens tomorrow. You have import prices month over month. And then you finish off at 9 o'clock with the University of Michigan Consumer Sentiment Report, of which I've kind of told everybody here that I'm not putting a lot of weight in there. I think that they're politically driven, so I don't really trust the numbers that much. Okay, let's get into things right now. If you're new to the channel, subscribe to the channel, hit that thumbs up button and like this video. And don't be afraid to share the video as well. Everything that you see as far as the views, as far as the subscribers, it's all organically driven, all based on my consistency of being here every single day, Monday through Friday, with a few scattered days that I'll miss if I'm traveling or such. However, it's all it's all controlled by the algorithms. I have no control over that. So the more you can help, I appreciate it. So looking at oil right now, oil is elevated, not surprised, based on the tensions that have increased now over in Iran. We have this gap down here from June 15th at $84.34 a barrel. It's stuck here, wedged below the 50-day moving average at $85.70 a barrel. I think we do have another gap down here, $96.99 a barrel. Don't want to see that. We are above the 200-day and the 20-day moving average right now. We did not quite close this gap down from Friday at $71.63 a barrel. So it is elevated right now. Not surprised. The tensions have increased, and there's firing that's being exchanged out there. So not surprised that's elevated. Let's go over to the VIX real quick, see what the volatility index is doing. We did not close this gap down here yet from Friday, so it's the VIX is rising. Not surprised again. A couple gaps here and there, but we are below the 20-day moving average at $16.87, as well as the 50-day moving average is $17.25. You want to stay below that. I'd like to see us close this gap and move back down to that $15 range. That would be good. However, we are still below this 200-day moving average at $18.70 as well. So it could be consolidating a little bit too. So nothing to be concerned about. So I'm not surprised about this slight elevation here. So let's get into the broader markets again. So where are we? Let's go start with the ES here. So close that gap up at 76.20, or gap down from Friday at 76.24.79, and now we are starting to flush right now, and I think it's due to that unemployment rate number that came out. So if an unemployment rate is down, that's just going to give more hawkish data to increase rates. So Got to hold this 75, 75, 25. If you lose that, I think that you could flush back down here to this 20-day at 75, 34, 59, and sitting right above the 50-day at 75, 27, 85. I would suspect if you did flush down there, you can get some support. However, if it flushes hard, who knows what kind of data comes out or what kind of news comes out. 74.80 is your July 2nd. July 2nd, excuse me. Is your July 2nd low at 74.80. Everybody knows I do this pre-market this early in the morning. I don't know why they're calling me, but anyways, 74.80 would be your low if you did flush below the 20 and the 50. Let's get over to the SPY. The SPY is going to be looking very similar. So the SPY right here, still above the 20-day moving average, and this low from July 2nd at 745.21, and it's also sitting above the 20-day at 744.89. Also, not a bad pullback. 743.46 is a high from May 15th. We did close this tiny little gap down here from Friday. That was actually closed yesterday, so that's done. If you can get a pop and a hold above 754.91, I think you can push into this open point of control that we have from June 4th at 757.70. And that, as I said yesterday, if you can get a hold above that, then I think you push towards all-time highs at 760.40. I think we're just going to be in a lot of choppiness right now, people. So I would just not get overly crazy about one move or another. I think everything is just, you could see right here, it's consolidating here. You do have some dips and it comes back up and then it gets rejected. This is what you call uncertainty in the marketplace, people, right? However, you're still moving higher here, so pay attention to that. Let's get over to Nasdaq. Nasdaq, oh, that's a bummer there. Let me fix that. Nasdaq below the 50-day moving average, sitting at 29,855, and the 20-day moving average at 29,879. This is a bearish chart we're looking at, people, right? As long as you're below those moving averages, you're looking for pop and fades. Line in the sand today, I think, is 29,649.75. As long as you're below that, I think the shorts are in. You can see we are below this low from June 12th at 29,507.67. Could use that as a level. Pop and fade into that. If you got to hold this 29,319.27, I told you yesterday, just put these levels on your charts, people, and utilize these levels, right? So you did dip below this 29,507.67 yesterday. Got above it, but now we lost it again today. So this is going to be a good line in the sand here. If you're below this, I don't like the longs unless you're above this 29,507.67. As long as you're below this, I think the shorts may fade a little bit. So if you can get a little pop and hold above this, I don't mind the longs here. As far as the downside here, I think this 29,044 level would be a good level if it flushed all the way down there. Below that, I don't have anything until 28,512, and that is the June low. That is a must hold. If you lose that June low right here, then you're going to flush down to the 100-day at 27,755.44. Is it going to happen right away? You never know, but the truth is, I think it's inevitable based on this long rally that we've had. We are consolidating right now, and it's waiting to break out one way or the other. So you can see right here, if you can get above that 30,000 level, right, you can push all the way up here. I don't have anything coming in till 30,545, but then you can see on the downside here, right, you've got nothing helping here until this low of June, 28,512. So if we do continue to flush right now, just have these levels on your chart and watch and be careful of them, right? Let's go over to the Qs. Qs is going to be very similar. 20-day moving average below that. As long as we're below that, I'm not thinking long. I'm looking for pop and fades. 720.90 is your 20-day moving average. Yesterday, you could see this trade from yesterday. This level came in like a champ. 711.10, dip below it a little bit, little liquidity grab, and boom, pop right off it, right into the 50-day moving average. So the 50-day moving average is sitting at 718 and 7 cents. Can't think long until you're above that. You could see how it rejected it, got up there yesterday, tried to push above it and rejected it. You saw how we lost the 20-day and then lost the 50-day yesterday. So it's now on the bearish side of things. So got to regain those levels in order to continue to move higher. For today, got to get above 711.10 or I'm not thinking long. Downside here, I think you've got 700 level. And then if you lose that, same thing as on the Nasdaq. 686.37 is June's low. Must hold that. If you lose that, then you're going to possibly flush into April's high at 666.90. And it's also sitting above the 100-day moving average at 665.37. Okay, that is it for the broader markets and the Qs and the SPY. Let's get into the Mag 7 here. Let's look at this is NVIDIA. So what we have on here is we have our scalper that I was talking about earlier in the video. This is on Thinkorswim platform as well. We're looking at a 15-minute chart. You can see how beautiful it worked on this 15-minute chart as well. It gave you your short entry, hit not only the first price target at 11 o'clock, then it hit your second price target. Actually, it hit your first and second price target at 11 o'clock. So, you know, it's obviously going to be a lot longer on a longer chart on a 15-minute. So if you're looking at a 1-minute chart, it's going to hit your price targets a lot quicker. On a 15-minute, you're going to be sitting in a trade a little bit, right? So that's not my style of trade. However, it is a comfortable way of trading. Once you can take your emotion out of it, you have a proper lot size, and then you put your trade in, you set it and forget it, right? As far as our levels today, got to hold this 208.76 level in order to continue to push higher. In order to get, if you can get above that 213.99 level, then I think you could push back into this 219.09 level. I think your line in the sand is probably going to be this mid-range here of yesterday's 15-minute. So 212.53, if you pop up there, I think you get some resistance. On the downside, you're going to have to hold yesterday's low. You can see how it's plotting it for you automatically right for today. So the day's not even started yet, and it's already plotting your levels from yesterday. Here's a high from yesterday. Here's a low from yesterday. These yellow dots here, these are pre-markets, right? So very important. Break one way or the other, then you're going to be looking to take your trade. Got to hold this 204.13 level. If you lose that, you come down to 263 level. I already went over the upside. If you could regain 213.99, you could push into that 219 level. Okay, that is your Tesla. Excuse me, that is your NVIDIA, pardon me. So let's just keep moving along. I'm going to plow through the rest of these right now, not explaining the strategy on this. You can see, though, right now, this hit yesterday on Apple, hit both your price targets on a 15-minute chart. Fantastic, people. I don't know what people are waiting for. You got to get on this and you got to see what's happening here. I'm very happy to share this with people here. Got to hold this this all-time high at 323.45. So that was the all-time high that was set on when was that? That was set earlier this week. So nice pullback, long levels. We are approaching this 134.98 level. It's 127% Fibonacci extension that I was talking about. So we are inching our way towards there. So if we get to that level, I would not be surprised if we get a little resistance. But you can see how beautiful the previous all-time high was yesterday, right? So yesterday pre-market, I said if we can get a break and hold above that, that's going to be a decent level. And just like a champ, it just shot out of there like a rocket. And now you can see the market popped above this all-time high from Monday at 323.45, and they came back down and look at the support, right? Beautiful level, okay? Let's keep moving along here. We're on Meta right now. Meta, the same thing. Both price targets hit on our QOL ORB Scalper. Just fantastic, people. On Meta, got a whole 677.86. If you lose that level, I think you're going to flush back down here. Could flush back down to, I would say maybe 656.56. So you could see, you know, big range yesterday on Meta, 657 all the way up to 686. So it was a really nice move. But you got to hold this right now. This is all pre-market stuff. I think if you lose this, you could start flushing back into the 657 level here, which is yesterday's low. On the upside, if you can regain this lower end regressional trend line at 697.31, you can push into that 709.13 level. I think if you push into this level here, 697.21, I think you're going to get some resistance. This is a lower end regressional trend line that I have from November 15th of 2022. So that's going to have some weight to it. So watch that level up there. And let's get into Google. Google, same thing, people. This is beautiful. Look at these levels here. Hit that 15-minute price level, the first one, and then the second one it hit later on in the day. I think right here, about 11:15. So fantastic move on that. Google, you could see that break and retest. So it broke the low of this 378.60 level, and it's also the high. It's also the high of the pre-market. You can see that plotting right now. So that's the main level. If you're below this, I'm not thinking longs. I'm thinking pop and fades. If you pop up there again, maybe you get a little fade. If you can't break above it and hold it, then I think you could push into the 390.27 level. On the downside, a flush down to here to 363.09 would be a decent level. However, I do like this 360.99 level. And if you lose that, then you come to this upper end regressional trend line that I have. It's a shorter one that I drew since May 18th of this year. So that could be a break and retest of this level here as well. So 357.79 if you flushed all the way back down there. I'm not sure if that's going to happen or not, unless there's some news that's going to come out. So, okay, let's get into Amazon, and we are almost done, people. A few more. So Amazon, same thing. Hit your first price target yesterday in the 15 minutes. Just absolutely beautiful. Holding this 255.19 level, that's a must low. It's a May 1st low. If you lose that, I think you flush down 252.53 level, which would not be a bad break and retest. That's a high from June 26. If you lose that, I think you could flush down to 248.93 and give back this entire move. So that's all possible. When you get these one-sided moves right here, it creates that speed zone we talk about all the time. So I would say 253.73. If you lose that, I think you can continue to flush down to these levels. On the upside, if you get over 257.09 level, I'm not sure what I have up there right now. I'm going to have to do the Amazons. I think we're at all-time highs on Amazons. I'd have to double check that. Let me just go here and go like that. Yeah, it's an all-time high up at 278.56 level. So if you can, looking at a daily chart here now that I open this up, it looks great. If you can get above 257.09, this whole area will become a speed zone. You'll probably come into 262 for your first line of a low here. And this is what I'm looking at, a weekly chart. So I'm going to actually draw that. So that is a weekly low from May. So let me just label that right now. So that would be a decent level there if Amazon does pop and continue to pop. And you can see right now, looking at a weekly chart, we are making new highs, right? A higher high and a higher low. That's all stair-stepping higher. So that's the one thing that, when I do my levels, I always start out, I start looking at my levels on Sunday. I start out weekly, and then I work my way down to daily, then to a 4-hour, 2-hour, and that's how you work your way down. So these levels, when you're using a weekly low versus a 15-minute low, this is going to have a lot more weight to it, right? So if you do get above this 257.09, you pop into this 262.07 and possibly get some resistance. And if you get above that, then you start making your way back towards the all-time highs at 278.56. Okay, last but not least, actually, we got two more. Microsoft. So nice to see Microsoft pushing back. It has been getting kicked in the teeth. It's been in the penalty box for the last several months. Got to get above 432 level. I did call this 350 level. Yep, I did call this 350 level. When did that come into play here? That came into play about a month ago, maybe, right? Or maybe longer. It's 374. Let me just do this. Yep. So yeah, that 350 came in on June 25th. I don't know who. I think I may have been talking to my brother, telling him about that level. Pulls back down there. That's going to be a fantastic level. Actually, I had that dotted level on there. I did not even touch it. But looking at Microsoft now, this is a 15-minute chart. Same thing. All the Mag 7s hit their price levels yesterday on this ORB Scalper here that we created. So very excited about this, people. I can't get the word out fast enough here. Got to get above 432 level. This is an May low. Let's change this. I don't know why I don't have that in there. Okay, that's fixed now. It's bothering me yesterday. So I got to get above that in order to continue to push higher. And on the downside here, I would say if you get a pullback, I like this pullback long, 393.76. It's a high from July, from this week. I think, yeah, it was from, when was it? Oh, yeah, it was 2 days ago. So decent level pullback long here. If you lose that, 389.45 is your next level of support. And if you lose that, I think you flush back down to this upper regressional trend line that I have here from July, almost a complete year ago. So this is actually a pretty decent level here. So this level has been drawn all the way back since July, and you could just see the nice support that it's got. So if you did flush, this would be a nice level to get long at it as well. But you can see it's definitely starting to, trend higher right now. So you got to pay attention to that, right? Higher highs and higher lows, right? So here's your high from the other day. Here's your higher high. Here's your low, and here's your higher low, right? So higher highs, higher lows is stair stepping higher. So it's bullish. So you're looking for pullback longs. I don't see, let me see where your moving day averages are. So we are above the 20 at 380.05, so that's positive, but we're sitting here right at the 50-day at 402.17. So got to bust through that. If you bust through that, then you can push towards that 413.05 level. All right, let's get on to SpaceX, and we'll do Tesla, and then we'll talk about what we're going to do for today, and then we'll get on our day. SpaceX, been talking about, I was talking about higher highs and higher lows. Let's talk about lower highs and lower lows, right? So that's what SpaceX has been doing since pretty much the open. Boom. Very easy to read. Looking for some life support. I don't think you're going to get the life support for quite some time personally. However, look at your levels here right now. So as long as we're below this 135 level, which is the opening day low, I am not thinking long on SpaceX. Must regain that in order to think long. As far as the downside, I don't have any levels on the downside for SpaceX. Yeah, actually I do now. So here's your downside for today. 132.15. That's the low from yesterday. Got to watch that level. If you pull back down there, then and you lose that level, you're going to flush. I'll have to do a Fibonacci level. I'm not going to do it right now to get an extension on that. On the upside, if you can regain this 135 level, I think you're going to be in this channel here, 135 even up to 138.69. And then if you can't get those pops, who knows what kind of news is going to come out with Musk, then you have your other levels in here. These levels are very easy to identify. Put these levels on your charts. Don't be a fool. Copy them, paste them. That's it for SpaceX. Okay, now let's get into Tesla. By the way, if you have any other stocks that you want me to cover, I'll be glad to do that. However, I do not cover any penny stocks, people. Tesla, same thing. Here's the 15-minute yesterday on our scalper trade. All this stuff is all generated once the market opens. I don't touch this. Boom, hit your first price target. Did not get quite to your second price target. Give you your yellow square telling you this move was over, and then we pushed higher. But it was a beautiful break and retest though on Tesla, right? So we talk about break and retests all the time. Here's a perfect example of a break and retest. Okay, so here was your 15-minute range right here. The market broke, went down to the day, came back up here to retest it, and boom, and then it failed again, right? That is your ideal, perfect description of a break and retest. If anybody asks you what that is, you're breaking a level of a low, coming back and retest, and you sell it up here. And look at this, the ORB Scalper gave you the signal to sell that, and you would have been able to scalp that and make some money off of that as well. If you scalped it there at $3.99, you could have gotten probably about $5 out of it. Yep, $5 out of that in a 15-minute move there. So as far as Tesla for today, it did bounce off this 390.97 level. That's going to be a big level to hold. If we lose that level, I've got the next line of support at 387.89. If you flush through that, 382.78 is a monthly low from November of last year. That would potentially give you some support. Let's take a look at our point of controls, see if we have anything open from yesterday. There is nothing open from yesterday. However, we do have a point of control that's open from earlier from Friday. 408.85 is a point of control from Friday. If you scroll back here, you could see the point of control right here, right? So open point of control. Why is it open point of control? Because it gives you that point of control level where the most volume was traded on that certain day. So on Friday, July 10th, This was your average price where the heaviest volume was traded. So it gives you that line, and then once the market closes, if it doesn't come back up and hit this line, I consider it an open point of control level. 408.85 doesn't necessarily hit there today, tomorrow, no. Sometimes these point of controls stay open for over a year, and then they'll close out probably in the 90 to 95% range that they close out at some point. So going over our point of controls right now. So I went over our levels for today on the downside here. Must hold this level here. You can see it bounced off this 390.5 low. That was a July 6 low like a champ. It was also a 61.8% Fibonacci retracement level here that I have here from the high of last year, from the all-time highs actually of December. So must hold that. And on the upside here, I'm not thinking long until you get above this 393.63 level. I was talking about this the other day. That is the line in the sand for me in order to be long. If you pop in there, you could get a pop and fade. And that is a weekly low from May 19th. So if you pop into there, you could get some resistance and lose that level and go on a downside. You can see how it was supporting it yesterday in the close. And then you can see we now lost that level. So that is a break. We just went over the break and retest from yesterday. Here's the break of this level. This could come back up and retest it and could get some more downside. Now, if it flushes through, then you have, then you have to be careful. And here's your close from yesterday, 394.46. So as long as we're below these two levels, I'm not thinking long. I'm looking pop and fades. If you do pop through and you hold the close from yesterday, then you could get a long, and you could consider this 714 point of control. Actually, this 714 point of control was a pre-market yesterday, so I'm going to remove that. So you could push into this weekly high from at 396.23 from March 23rd of this year. So if you do pop up into that level, I had that level as well yesterday. Once we got above there, I liked it, but then we lost that level. So this is probably a better break and retest level than this 393.63. I think if you can get above this 393.63, I think you can push. But again, you're going to be crunched in between this level, 393.63, and the close from yesterday. You're going to have a pretty big surge in order to push higher. And you can see right now the overall markets right now are selling off a little bit, but now the buyers are stepping up there. So you got to be careful of that. And if you look at this, I was looking at Tesla this morning on a longer range here. Take a look at this. I mean, there's a nice. Let me clean this chart up here to make it better for everybody. Nice little wedge forming here, right? So, I mean, you could do this. Why is it not drawn for me? You could do that, and then you come down here. There's your wedge. For those of you who don't know a wedge, if you could break and hold above this wedge, I mean, look at how the volume starts to drop, right? You get big volume, and then it's more volume coming down in here. And so now how do you base your trade? I would actually move this here. Let me get rid of this. Move this. So there is your wedge. 389.30. If you break and hold below that with volume, you're going to continue to flush. Same thing on the upside. If you can break this this trend line here, I'm just going to extend it all the way right here, so I'm not going to have any problems here. So I think we could be a couple days away from this. You have all technology earnings coming out next week, so I think what I'm going to be looking for, if I can break and hold a candle at the end of the day with some volume, maybe even a 4-hour, I'll take a look at it. With some good volume up there, I may be looking to take a long, right? Because all this right here is going to become a speed zone. If it breaks with volume on the downside, the same thing. I could be looking to take a short, probably down here, 367. Don't forget, we have these point of controls. We had this last point of control at 334.07. That's still open down there. So your last line of support is going to be this 365.87 level. If you lose that, you're coming down to 334.07. Upside here, we have open point of controls at 408.95, 424.39, 444.31, and two more actually, 455.12, and the last one is sitting up here at 478.39. So that's positive for the upside. when the market gets out of its funk though. But you can see this nice little wedge forming here, people. So look up what a wedge does for you and look how to trade a wedge. I'm not giving you advice. I'm just trying to point some things out and what I'm looking at, right? So, it's a lot easier to look at the direction of a market from a chart that's further out. When you get down to this macro level, the 15-minute, it's more or less for scalping, right? So that's what I do is I scalp, and that's what I try to teach everybody. So that being said, let's get into what we're going to do for today. But by the way, just take a snapshot, put these chart levels on your own charts here, okay? All right, as far as today, what we're going to do, we're going to use tomorrow's expiration date. So I still have 2 days of trading left. So it's going to be July 17th expiration date. I do have a 405 call up here. I'm going to change that right now based on the market flushing a little bit, so I can increase my premium price. So you can see once I changed it from a 405 call to a 400 call, my premium price went up to $3.25. On the downside here, I got a 390 put. And I'm going to leave that alone. So that closed right there at 345. So we're kind of right almost in the mid range. We're closer to the put price than we are to the call price. So we're about $3 lower, about $2 lower rather, on the put side. So this premium price will elevate maybe in the low fours. So we're going to have 2 days left on these premiums to trade instead of, so I am now not going to trade 0 days till expiration. I'm going to trade, there's enough expiration dates and enough volume to give myself at least 2 days. So that's what I'm going to do. So for example, today I'm going to be trading tomorrow's expiration date. So that gives me time. If I get in a bad trade, it gives me time to evaluate the trade and get out of the trade. And then tomorrow, instead of trading tomorrow's expiration date, I'm going to trade Monday's expiration date. So it's going to give me the same scenario as I have for today. So what does this mean for you new traders here? If you're buying a one lot here and the premium's at $3.25, you buy in a call. If you think the market's going to go up, the premium price will go up. It will cost you $325 per one lot, okay? So if you buy a 2 lot, it's going to cost you $650. And then if the market goes up, and so what I try to do is I try to have my strike prices, right on either on the money or maybe a strike price away from the money. So my delta, and the delta means the deltas I trade are anywhere from like 40 to 45 cents, which means for every $1 that the equity price moves, this premium price will move 35 to 45 cents, right? So for easy math, call it 50 cents. If the market moves up $1, the premium price will move up $1 on the calls. If it moves down $1 and I'm trading the same delta, the premium price will move up 50 cents on the puts, right? Because if you're buying a put, you want the market to go down. If you're buying a call, you want the market to go up. So the inverse effect is going to happen as well. If I buy a call and the market goes down, this premium price is going to go down. Same thing on the put. If I buy a put wanting the market to go down, however it goes up, this premium price is going to go down. So that's pretty much 101 stuff. But anyways, if you go down in the description area, you can click on the WAP description there, and you can join our Discord community for free if you want to upgrade into our trade room. We do live trading, and what you see here from 9:30 a.m. to 11 a.m. and I answer any questions, and we have the scalper trade up there, right? So we show our trade that's going to be up there as far as using the new QOL opening range breakout, and this is what you would have seen yesterday. And we can also put it on TradingView as well, and that's the one that actually looks a lot cleaner. But this is what I don't trade through TradingView, so this is what I have up on my screen. However, it's identical, and it's plotting all this stuff for you anyway. So again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, share the video, and continue to share my videos with people and get some more subscribers for me. Everything is organic. I do not pay for any subscription. So again, have a great trading day. If I don't see you in the trade room, I'll see everybody tomorrow. Talk to you soon.